Okay, everyone. This topic that we're going to talk about today, I cannot emphasize on the importance of this topic. It's going to help you determine it's going to help you with multiple things in your trading plan. So this is probably going to be the most important topic here. The video might go a little longer than normal because this is going to be, if not one of the most important topics and phenomena that we're going to talk about now. So I want your full attention, full focus. Uh, this topic that we're going to cover today is going to help you with determining the direction on a chart. It's going to help you determine when you should be getting interested in a trade. It's going to help you uh, with your entries. It's going to help you with your stop losses. It's going to help you with your take profits. It's basically most of the trading that we're going to do in the future after you go through these courses is going to revolve around what we're going to talk about in this topic. And the topic is important areas of interest. Now, um, what everyone wants to do when they come to the chart is find an area to where they can look at to get in on a possible trade, right? So, of course, the general idea of important areas of interest in the market, we know support equals resistance, we know supply and demand. The third one you might not be um, aware of, or what do you call it? The word is just skipping my mind. Um, now, you might not be familiar with the third term that we're going to talk about. Anyway, let's talk about a quick discussion about SNR and supply and demand. Let's say the price is going higher, ranges for a little while, breaks higher, right? We've gone through what could have been a possible resistance, um, but as it has broken higher, could turn into a support. So we're going to need to see some pullbacks into this area so that we can go for longs again, right? That's the general idea of supply and demand. I'm sorry, support equals resistance. I'm pretty sure most of you are aware of how support equals resistance work, but of course, keep that in mind that it's never an exact price, an exact line. It's always an area, right? And then same is the case with supply and demand. The general idea of supply and demand in the markets is if we're talking about supply, right? You have a drop and then a little bit of pullback we refer to as base, and then another drop. So what you come to after this kind of pattern happens is you'd say that this is a supply zone where the price could not hold and fell down, and a discount came in. The supply is more than the demand, blah blah blah. There's a lot of stuff people talk about, but we're gonna keep it simple. We're gonna keep it as simple as possible. And again, on the buy side, what we talk about demand is price goes higher, puts in the base, goes higher again. So now you have a demand zone where, I'm sorry, hold on. Now you have a demand zone where when the price went to, the supply was not enough. The supply was less, the demand was more, so that the prices shot up from there, right? So now this becomes an important area. In this case, this becomes an important area. Let's do a couple of quick examples of support equals resistance and supply and demand, get it over with, and then come to the real thing that we're going to talk about. That is the money traps, where the money gets stuck, where you can almost 99% of the times expect a reaction in the direction that you've been analyzing the chart to go in. We'll come to that. Let's quickly go through some examples, and then we'll come back to this, right? Okay, hold on. Let's support equals resistance first. As you can see, let's just focus on pound dollar, this chart at the moment. Now, as you can see that the price dropped down. This is a drop down. Let me just, yeah, that should be fine. Okay. So as you can see, the price dropped down, pulled back. We have a resistance here. Price goes down, puts in a support, goes higher, cannot go through the resistance, comes back, holds the support, fakes out a little bit, holds again, fakes out a little bit, holds again, and starts to go higher. Now, as it goes through this resistance, obviously, we have established multiple facts of the overall price direction on pound dollar is in an uptrend, higher time frame is in an uptrend, daily 240-year buys, so we're waiting for buys and blah blah blah. But what you need to focus on is as this resistance breaks and the price comes back down to the same area, again, not exactly the same price, not an exact line, it's always an area of interest, right? Now the price comes back down to the same area around hereabouts, gets rejection, starts to go north. Same case here. When you take a look at this, the seller comes down, the price pulls back, puts in a resistance. Resistance again, price goes through the resistance. When the next time price comes back, that resistance is turned into a support and whatnot, and then the price goes higher again. This is how a scenario works. Same is the case with supply and demand, right? If you let me just find an easier example for you guys. Okay, let's take a look at this. Yeah, so it's the same concept with support equals resistance and supply and demand. So do not confuse both of them, right? The idea is to figure out some areas where you can expect a possible reaction from. Now, as we're going into the advanced stuff, so we're going to keep an eye on all of what we're talking about right now. So the simple idea of support equals resistance or supply and demand is more or less the same as we have discussed in the video about basics also, right? You guys might also know that. Another quick example, let's just do supply and demand. So the price sells down from here, comes all the way down to here, starts going higher, comes back to the resistance. Now, the the rise that we talked about, if you take a look at this, this is the buy starts from here, goes all the way up to there. There's a little bit of a pullback that you can refer to as base, and then the price breaks again for a higher high. The next time the price pulls back into thereabouts, it goes for buys again. Let's do a quick example of supply, and then we'll get to the real topic that we're going to talk about. Okay, let's take a look at this. Price makes a new low. Let me zoom in a little bit. Okay. Okay. The price makes a new low. What the? I'm sorry, guys. This is the mouse I use to play Counter-Strike. I wonder how I'm, getting those kills. Okay. The price makes a lower low, pulls back, drops from here, bases for a little while. This is what you can call that base, and then drops further. So you have a supply zone, a supply area. Again, it's not necessary for the price to touch that area and then start to go down. And the logic behind that, we're going to talk about further in the videos. For now, what we need to focus on is training our eyes to those areas that are going to help us figure out the overall direction, also help us figure out how to be patient for the price to come to those areas where we expect the possible reactions from, and then start getting interested on the trades. Now, do not get confused. I understand starting about 2 or 3 videos ago, I started throwing a lot of information towards you guys, but trust me, It's as compact as it can be, because what you need to understand is the industry you're trying to get in is the industry that pays the most in the world. There is no other industry that has this much of a prospect of you making money, becoming a millionaire, billionaire, other than this industry. There is no other industry. If you do it the right way, you're going to make more money than doctors, engineers, pilots combined. But the point is that you do it the right way. So you got to trust the process. I understand there's a lot of information coming towards you guys, but try and absorb that information, because I promise it's as compact as it can be and as relevant as it can be. So I figure you guys would have had a good idea of how support equals resistance and supply and demand works. It's what the you can find anything about support equals resistance or supply and demand on YouTube, and it's well explained also, that because it's such a simple, such an easy idea, right? But the thing that we wanted to talk about today, let's just try and find where we had our headings, and we'll take it from there. Give me a moment, please. Almost there. Okay, here we are. Another. Oh, let's just clear all of this. Okay. Now, one of my, in fact, the most favorite topic, money traps. What does the money trap mean? Okay, let's get into the theory of it first, and then we'll go to the examples on charts. And I'm going to give you multiple examples of this, because obviously whatever you see on the charts is not always going to be exactly the same. There will be times when you'll see something happening exactly the same like you've seen it some of the time, but not always, right? So there are going to be variations, there are going to be differences, but the overall idea, the logic is 100% the same every single time. So now focus very carefully. Take a look at what I'm going to show you guys. All right. Let's say the price is going in an uptrend. Starts to range for a little while and breaks higher. Now, let's say we're looking at this on a 60-minute chart. Of course, we've gone through support equals resistance. Of course, we are in an uptrend, blah, 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 all of that. And we have a supply. We've created a demand zone. But what you need to see is, if let's say we're talking about this is a 60-minute chart, right? Let's say that this is a 60-minute chart. Okay. What you want to do is, on that specific time frame, doesn't matter if it's 60, 40 daily, 240 daily, on that specific time frame, or even on a lower time frame, if you go down, even if you have to go down multiple time frames, somewhere in here, somewhere in this area, again, please focus, and if you get confused, I'll repeat it for you guys. Somewhere in this area, if you go down multiple time frames or even one time frame, somewhere in this area, considering all of this range could be turning around, I'll sell it from up here, make money to at least down there, but the price immediately goes through. Somewhere in this area, there's going to be a little seller that got wrong-footed as soon as he got into the trade for the sell side. Again, somewhere in this area, there is going to be a little seller that does not look significant at all. But the significance of that little seller is that the seller got wrong-footed right away. The price did not wait for him to even settle down. As soon as he got in on the trade on the sell side, the price shot up. I want to use other words for it, but I cannot. Maybe down the road when we do our, monthly calls and all conference calls, we'll talk about how I like to talk about this. But as this is an educational course, so I'll keep it not so obscene. Um, anyway, somewhere in there, there is going to be a little seller who tried to sell and immediately gets wrong-footed. This is very important. I'm going to do the theory on the sell side one more time, and then we'll go to the charts, and we're going to do multiple examples of this. And what you guys need to do after you go through this video is you got to take a look at multiple examples yourself, because we've talked about this before, that human beings are creatures of habit. Trading also becomes a habit as time passes. So how you turn it into a habit is by practicing the same thing again and again and again. So you gotta go through multiple examples of what I'm about to show you. And then if you're confused about if your examples are right or wrong, you can always send a message to us in the chat group, and we will be there to help you out. We will be there to explain it to you guys furthermore. But the most important thing is that you practice what you're taught again and again and again until your eye gets adjusted to it. If you do something multiple times, more than the required number of times, your eye starts to adjust to it. Just like driving a car, right? When you started learning how to drive, you did not know what you're doing, where the accelerator is, where the clutch is, how do I shift to second gear or third gear. If you learn on a stick drive, if you learn on an automatic, good for you. Where the brake is, even for automatic, some people when they start learning how to drive, they use both their feet. Well, you're not supposed to do that. But once you've learned how to drive, once you've driven again and again and again, let's say, let's talk about you yourself. Let's say 5 years from now, you did not know how to drive. You started learning how to drive. And then now, while you're driving, you're not just driving, you're using your cell phone, and one of your hands, you have a cigarette, you're talking to someone, and you're just driving, right? You're not even paying attention, and you're driving. This is exactly how trading works. You have to incorporate it into your behavior. And the way to do that is to practice more and more and more. Okay, getting right back to the topic, let's delete all of this. And there we go. Sell. Price goes down, pulls back, goes down, ranges for a little while, comes back down, tries to go, cannot go, fails. Somewhere in this area where the failure happened, if you go down time frame or even multiple time frames, you'd be able to find a little buyer who got interested on the buy side and immediately got wrong-footed. Immediately, in a snap, the price goes against them. These are the areas where money is stuck. These are the areas where the price is more often than not gonna come back to before it goes for a bigger sell. Keep that in mind. These are the areas, because the logic behind is, I understand it's going to be a little difficult for you to grasp it right now. The logic behind is for the institutions who are trading bigger money. For them to make money, let's say they want to make money to the sell side. For them to make money, there has to be buyers that need to come in. Because if there are no buyers, they cannot sell to anyone. So they need buyers to come in. And in order to entice the buyers, they start buying little positions themselves. They start buying little positions themselves. And as soon as they figure out that there is enough interest on the buy side, they hit it hard for the sell. taking out the stop losses of the retails and blah, 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 uh, triggering emotions. We'll talk about all of that stuff later on. For now, we are focused on the logic of why money is stuck there. So the institutions, the hedge funds, the bigger sharks, they open small positions of the buy. And as soon as they figure out that they've enticed enough people to go into the buy side, they hit it hard for the sell side. The price shoots down, but the buys that they had opened are still open. They haven't, because they sold so hard, they didn't have enough time to close their buy positions that they used to, what we call inverted commas, manipulation in the market. They did not have enough time, although they're aware of the fact about what they're doing. So what they start to do is taking out profits as the price goes down and down and down. They keep taking profits, so the price starts to pull back. Where does it pull back to? Because the buy orders that they have already opened, that are still open, they need to be closed for them to be properly in profit, right? Otherwise, if the buy keeps running and they're selling hard, they're still, in loss somewhere or the other. So they gotta close those buys. And that's where the price is gonna come to. And more often than not, you'd see the price come there aggressively. The idea of that aggressive buy or aggressive sell into the demand zone is to entice people to get into the buys or sells one more time. And that's when the bigger sell comes in, the bigger moves come in. Because they close their buy positions that they need to close. They got more people interested in the buy side after getting hit on the buys, right? Because you might also have experienced it. If your analysis says it's a buy, it does not matter how far long the sell has gone, you're still looking to buy. And after doing this aggressive sell, when the aggressive buy comes up, the idea of it was a buy, all it wanted to do was give me a loss. Manipulation happened, and now it's going to continue to go higher. That's when more people start to get in on the buy side because their emotion triggers. And that is when the bigger players, the bigger shark, get to close their positions that they're open to manipulate the markets. And that is when the bigger move comes in. Okay, so it's already a pretty long video. We're going to go into the examples really quickly, but I'm going to give you multiple examples. So stay with me, okay? If it's confusing, it does not matter. We're going to go over this stuff again and again and again until you master it. Okay, let us go into the replay mode here. Now, again, let me show you 240 first. 240, uptrend, higher highs, higher lows, pullbacks coming in, aggressive pullbacks, and people turning to sell side. We'll talk about all of this stuff later on as well as we move forward. But for now, stay focused on what I'm telling you. Okay, so on 60 minutes, we go through our resistance. Let me take you down to 15 minutes. And what do you see? From this area, I actually find it funny at times how pinpoint accurate it can be most of the times. I find it funny. Let me delete all of these brushes. Okay, hold on. From this area of a very strong sell and wanting to sell with this big sell, someone hit a sell in there. Can you see the sell? Someone hit a sell in there that immediately gets wrong-footed. The price immediately goes against them. Immediately goes against them. Now, let me play it for you. Let me play it forward for you. Okay, let's see what happens now. Let's quicken it up. Okay. Come on down, come on down. The price is going to come down exactly to the same area and then react. Okay, okay, come on, come on. There we go. And there we go. And there we go. Yeah. So the buys take over, right? Okay. And so again, let me uh, how do you pause this thing? Okay, I actually find it really funny at times, but all right. So an example of, you can also call this a demand zone. You can also call this where the exact area where the prices turn to the buy side, breaking this resistance, turning into support. But what I want to call it is money traps. This is where the money's stuck. This is where the money gets stuck. Another example, a very clear example of, in this downtrend, right? The price comes back up aggressively, starts holding, 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 uh, goes through this, right? Goes through this, the price sells somewhere in here, try to sell, but right away the price goes against them. The next time price comes back into that area, we buy. Okay, another example. Let's do quick examples. Quick examples. Okay. There we go. Let's go to 1 hour again. Let's go to replay. Let's go to this area. And okay, here we go. Now, with this seller, as the price is coming higher, putting in a resistance, somewhere in here, someone hit a sell. Let's go down to 15 minutes and take a look. Yeah. Somewhere in here. We should go further down, I think. Let's go to 3 minutes. Okay, there we go. There we go. Let me clear all these brushes. Let me show you what I'm talking about, and then we'll do another quick example. The video is almost 30 minutes. We'll do another quick example to the, a couple quick examples to the sell side, and then we'll call it a video. Okay, let's take a look at this. Keep this in mind, okay? We can go to 15 minutes. We're gonna take a look. Again, somewhere in this area, we saw someone hit a sell. Let's play this. Price is coming down, goes to thereabouts, reacts, and the buy takes over. Right? Okay. Again, keep in mind it's not an exact pinpointed price. It's always an area, but how it's, I think you must have a clear idea of how it's going to help you determine the direction, how it's going to help you to wait for the right time and the right area for the price to come to, for you to get interested on the buy or the sell side. Okay, quick examples on the sell side now. Let's find an easy example here. Okay, let's take a look at some of the chart quickly. EuroCAD. Yeah, here. There we go. Okay. All right. So the seller goes down, starts to hold as a resistance, and the price breaks through in an uptrend. Of course, we know we're in an uptrend, right? The price breaks through. Now, somewhere in here, let me circle it a little bit. Somewhere in here, there's going to be, oh no, we were going to do sell sides. I'm sorry. I actually get really excited when I see this stuff. Sorry. Okay, let's do the sell side. Actually, a lot of stuff's been in an uptrend for a while. Take a look at Aussie dollar. Yeah. Take a look at Aussie yen. Maybe. Nope. Take a look at dollar yen. Yeah. Okay. I'm trying to find an easy example again for you guys so that you can understand better. Okay. Maybe we would be able to find something here. Somewhere in here, there should be a buyer that got wrong-footed. Nah, there isn't. There is not. Okay, anyway, I'll find an example for you guys. Hold on. Hold on. On gold. It's actually, a lot of stuff's been in an uptrend. Euro, dollar also. A while it's been an uptrend. Euro, yen today sold. I want to find an easy example for you guys. And it's actually easier to figure out in live markets. So do not be afraid, right? It's actually easier to find this stuff in the live markets. Let me go to a higher time frame and try and see if I can figure something out. Yen, Aussie. Yeah, this is a trade that I took today based on the same thing. We'll talk about this as we go forward with the courses. CAD yen probably. Okay, let's do a different variation of it. Let's do a different variation of it. Take a look at this. Now we established with the fact 1 hour is in downtrend. We have a very choppy pullback. Price goes down, fails to go through, goes up again, turns this into a buy, pokes higher than this also, and as it pokes higher than this, somewhere in this area, there is going to be a buy who tried to buy off of this resistance turning into a support. And let's go down. Yeah, there we go. There we go. These bit of buys that you see that get taken over by the sell immediately, the next time price comes back into the same area, the sells go. This is a different variation that is going to help you with your entries, right? We saw how we figured out the direction on pound dollar. This variation that I just showed you guys is going to help you with your entries. Let's do another quick example to the sell side. Sell side, sell side, sell side. Okay, here we go. Here we go. Oh, did I lose it? Did I? No, I didn't. Here it is. Okay. Last example, and then I'm going to call it a video. It's pretty long already. Okay, so we have a ranging activity here. Price been ranging, and then it breaks through that range. Breaks through, closes. Take a look at this buyer in here who tried to buy, thinking it's a range, got wrong-footed immediately. The next time price comes back into thereabouts, the sells take over. Now, how to enter, when to start getting interested to enter, that comes down the road. What I need you guys to do for now is try and mark as many as possible areas of interest that you think, again, it's not necessary for you to call it a money trap. You can call it a supply. You can call it a demand. You can call it support equal resistance. But these are, different than your general support equal resistance of supply and demand. So I want you guys to go through the charts and try and figure out some of these areas where you think the opposite party got wrong-footed, actually got massacred. Because think of yourself in that position when you get in on a trade and right away, in an instant, the price goes against you, leaving behind the trails of what it's going to do next. This is an important piece that I just said. It's leaving behind the trails of what it's going to do next. And then, how you read the pullbacks and how you're going to get into other stuff. It's going to come down the road in other videos. All right. I'll see you in the next video. Cheers, guys. Cheers.